One of Australia's leading independent banking analysts has accused banks of using small business as a soft target to boost their profits. Paul Dowling says there is often no justification for business lending rates which are higher than those charged to home buyers. Andrew Robertson reports.
Small business has been complaining long and loud that banks have used the global financial crisis as an excuse to target them. Now respected banking analyst Paul Dowling has used an address to a banking conference in Sydney to back those claims.
Credit has absolutely dominated bank behaviour with their customers. Customers have been repriced in business banking. There's a need now for a sea change to move well beyond those moments of crisis.
As debate rages about banks' threats to raise their home loan mortgage rates independently of Reserve Bank increases, Paul Dowling notes that a much bigger slice of the bank's business hardly gets any public attention at all.
45% roughly of all banks' balance sheets are business lending. And the amount of exposure that business lending rate changes get is relatively minor. And yet it's where the banks generate significant margin and significant profit.
Mr Dowling believes there's an element of gouging in what the banks charge their business customers, particularly the higher interest rates charged to small business.
Most small business lending is secured against a family home, which is retail mortgage lending by any other name.
But business people using their homes as security for a loan are not charged retail mortgage lending prices. For example, the ANZ Bank website quotes the variable home loan rate at 7.41%. For small business borrowers, there's a business mortgage index variable rate of 9.12% or a business saver rate of 8.62%. Both these business loans must be secured against the family home.
That they should not charge extra to someone who's using the same collateral. If I've got a house and that's the end of it.
As head of the Council of Small Business Organisations of Australia, Peter Strong is well acquainted with the tactics used by banks. He says banks see small business owners as cash cows rather than as people.
So it just makes no sense that business loans are 2% or 1% or 1.5% above the mortgage rate. There's no logic to it, there's no reason for it. Several years ago it didn't happen, and I think it's just the banks trying to make a bit of money out of it.
Not surprisingly, the banks have a different view. The Australian Bankers Association, which is the banking industry lobby group, says in the years leading up to the GFC there was a small business lending bubble which it says was unsustainable.
There are good businesses out there that are finding it difficult, but we are working in a very different world, and I think banks and businesses need to recognise that that is the case and work out, well, how do we continue to fund small business going forward.
Paul Dowling believes banks may be paying a price for their behaviour towards small businesses. He says rationed and very expensive credit is encouraging them not to borrow.